Hello, everyone. Today, I want to look at some of the sectors that are within the S&P 500 so we can look for trading ideas. I think this is a pretty effective way to do it. The best traders let the market tell them what to do. They try to stay away from having preconceived notions. Now, I've worked with some of the best traders that there are, and I can tell you straight out that the secret is there is no secret. The secret is let the market tell you what to do and worry about psychology. Anyway, the S&P 500 consists of 500 stocks, hence the name S&P 500, and within the S&P 500 there's 11 sectors. So every one of those stocks is a member of a sector. So fortunately for us, we have this ETF family, the spiders, for Standard and Poor's Depository Receipts, but they're known as spiders, that track these different sectors. Here we have the consumer staple ETF. Now, when we're as traders, what do? We look for things, or what do we want to do? We want to find things that look like they're going to make moves imminently. And when I say imminently, I mean within the next few days, maybe the next week or two, depending on your time frame. But I'm going to just look at this as kind of a swing trader time horizon, and we're looking here at days. All right, so each one of these is a day. The same principles apply though on shorter time frames, longer time frames. That's the fractal nature of charting. But anyway, let me just kind of get right into this here. So we can see this sector is very oversold. Down here on the bottom of this screen, we have what we call the relative strength momentum indicator. It measures momentum. Momentum is a measure of how far something has moved from time point A to time point B. The vast majority of the time, something, a security, in this case an ETF, stays within its average or its typical trading range. If something gets below that, we call that oversold. Now, why is this important? Well, because a lot of traders are going to be entering the market as buyers because they're going to be expecting a reversion to the mean. A lot of strategies on Wall Street are based on this concept of reversion to the mean. So, oversold, people think it's going to reverse, go back into its average range, and in this case, that would be a move higher. Now, there's a reason why there's support at this level, okay? Notice how it was resistance back here. A lot of times levels that were resistance can turn into support. This happens because of seller's remorse. Anytime we look at a chart, we want to look at it through the prism of what does this tell us about supply and demand, and what does it tell us about psychology? Well, why would a level that was resistance turn into support? Well, let me elaborate a little bit. When a market is moving higher, there's not enough supply to fill all the demand, or there's not enough sellers to fill the buy orders of all the buyers. So the buyers are forced to pay a premium, and this forces an uptrend. Now, when we break through the resistance, it tells us something. It tells us that those investors who created the well, when we get to a resistance level, there is enough supply to fill all the demand. Okay, when we get above it, we call that a breakout. That tells us that the investors who created the resistance with their sell orders are out of the market. So the market moves higher. A lot of these investors now regret selling because the price is higher, and they tell themselves, "Man, I made a mistake. If I can, I'm going to buy my shares back, but I'm only going to do so if I get them for the same price I sold them at." So we have remorseful sellers placing buy orders at a level that was resistance. Now, this combination of these remorseful sellers placing buy orders and these oversold conditions drawing buyers into the market means there's a good chance that we could get some kind of a bounce here. Now, what we're looking at is the sector. You could trade the sector, sure. I mean, a lot of people do. You could trade the ETF, you could trade the options on the ETF, or what you could do is you could look within the sector at the stocks that make up the sector to see if there's something that looks more, I guess, appetizing. I don't know if that's the right word. More compelling. I guess that's probably a better word. So, what stocks are in this sector? Consumer staples are products that people need as opposed to products people want. I mean, I don't know why Pepsi and Coke are here, but I mean, I think if the world's coming to an end, you're not really going to be thinking, oh, gee, let me go get my Diet Coke. But anyway, I don't make those decisions. So I went through these stocks to see if I could find something that looks especially compelling. Now, these are just the top 10. I'm not sure how many stocks are in the sector. It could be 30, 40, 50 maybe. But these are the 10 biggest. And the place I get this is at the spiders are run by State Street Global Investors. So if you just type in the symbol, in this case XLP, and then SSGA, that's going to bring you to the fact sheet, State Street Global Advisors. So this is where I get this information from. Speaking of Coke, I looked here. Now, if this sector bounces, Coke will probably rebound by more, a greater percentage. So you might be better off having your money here as opposed to in XLP. Notice we're very oversold. That's going to draw buyers into the market. And we have resistance seemingly has become support. So this combination of remorseful sellers placing buy orders and oversold conditions could bring buyers into the market. We could see a bounce here. Target also looked pretty compelling. The other ones didn't as much, but I like Target here. So why would something bounce off of support? When markets moving lower, there's not enough demand to absorb all the shares that are for sale or the supply. When we get to a support level, well, the tide turns. All of a sudden, there are enough buyers around. There is enough demand to absorb all the supply. Now, as you'll notice, sometimes when we get to support levels, we bounce. Why does that happen? Well, think of this. Think about it this way. An investor is saying, all right, well, I'm considering buying Target. I see it's trending lower. I'm going to wait for it to stop going down. And then I'm going to figure out where to buy it. Well, wait a second. All of a sudden, the share price is not moving any lower. What does this mean? Well, it means that there are other buyers coming into the market. That's why the price isn't moving any lower. All of a sudden, there's enough demand to take in all of the supply. So that stops the price from moving lower. Now, some of these investors who want to buy start to get nervous. They start to think, gee, there's other buyers coming into the market. I might miss. I got to be able to pay a higher price because if someone else is willing to pay a higher price than I am, that's where the sellers are going to go to. They're going to go to whoever has the highest price. So the buyers start to get nervous that they're going to miss out and they start to jump ahead of each other and it causes this snowball effect. The vast majority of moves in the market are due to investor psychology, and that's it. It's not due to the news, whatever they're saying on CNBC or whatever. All right, it's investor psychology. Same thing happens with resistance level. People are watching the price go higher. They're thinking, where am I going to sell? Then all of a sudden, it's like, oh, the price stopped going higher. That must mean other sellers are coming into the market. So I better reduce my price because the buyers are going to go to whoever has the lowest price. So we get a snowball effect, and this is why we sell off of resistance. We get the snowball effect, and that's why we rally off of support. So we're oversold. Now, here's the thing. Just because something's oversold and at support doesn't mean that it can't keep going lower. So a good strategy is to wait for the actual reversal to start before you jump in. You're not going to get the very best price, but you're going to have the odds in your favor. Or risk-reward odds, I think, are going to be better in your favor. So we're trading around 139. We could see this support was around 140 and a half. So potential strategy is wait for the stock to get back up above this level, and then that's where you buy. See, this support became resistance. Well, this happens because of buyer's remorse. People bought here, and when the price goes lower, a lot of them regret doing so. So they tell themselves they want to get out, but only if they can get out at break even. So we have remorseful buyers placing sell orders, the level that was support. If we break below here, this former support level could convert into resistance. So we want to make sure that doesn't happen before we jump in. That's why we wait for it to start moving higher. You're not going to get the very bottom price, but you're going to have the odds, I think, are going to be better in your control. Remember, we're not here to be precise or perfect. We're just here to make money. All right, let's move on here. Utility sector also very oversold and at support. So a principle that when things are oversold and they get to support, they tend to bounce. That's what happened back here. And it's that same thing. It's the buyers start to notice other buyers are coming into the market and they get afraid that they're going to miss out. So they decide to jump ahead of them and we get this snowball effect. Here we can see support converted into resistance. Knowing where the important price levels are is pretty much an essential thing, in my opinion, for you to be a successful trader. Some price levels are more important than others, and that's just how it is. And if you know where they are, you can make money because when something gets to one of these important price levels, they tend not to hang out for too long. They tend to make a move one way or the other. So again, we're getting to support. These buyers might start to get anxious and jump ahead of each other. That could start to push the price higher. These overconsold conditions are going to bring other buyers into the market. So oversold markets that get to support tend to bounce. Now, this is the utility sector, at least the top 10 stocks in the utility sector. We were just looking at the XLU, which is the utility sector ETF. Now we're going to look at stocks within the sector. Sempra, maybe we give it another couple points, but if we get down to around 139, I'm certainly going to be watching this. And here we see resistance became support. This is our seller's remorse, right? Support, support, support. We get to support. Investors start to get nervous that they're going to miss out. So they start to jump ahead of each other. And as we can see here, our principle, support, oversold, we bounce. Support, oversold, we bounce. Support, oversold, we bounce. Now we're getting close to support. We're oversold. Let's see if the same thing happens again. And American Electric Power, same kind of a deal here. We're at support. This year we are at support. We're very oversold. The last couple times you can see we got this oversold. Would have been a good time to buy. So remember, support is a large group of investors that are looking to buy at or close to the same price. These investors start to get nervous that other people might be willing to pay a higher price, so they do the same and it starts to snowball effect. Oversold means we've been beaten down below what would be its typical or normal trading range. This could bring buyers into the market who will be looking for a reversion to the average, which means a move higher. So remember, there's no secret. The secret is there is no secret. All right. I've worked with some of the best traders in the world, and I can tell you firsthand they don't have magic systems that work all the time. But what they do have is this ability to let the market tell them what to do, not to have preconceived notions. If you're just buying something just for the hell of it, well, you're just guessing. You're probably going to lose money. If you're buying something that's oversold and at support, well, there's no guarantee that you're going to make money, but you're going to stack the odds in your favor. All else being equal, a stock that's oversold and at support has a much greater chance of moving higher than a stock that's just trading neutral. All right, so that's it, everybody. I hope to see you soon. And until then, best wishes.